in a world where you have 100 million Bitcoin users using Bitcoin as their treasury asset, then you've got a certain demand. Now, if they decide they want to go all in and they want it to be 50 or 75 or 90% of their savings, adoption increases. When you go from 100 million to 500 million people using it, adoption increases. And adoption increases because of awareness. It's spreading over time. It increases because of crisis. For example, the Russian sanctions and the war in Ukraine, that drove adoption. Macroeconomic crisis. COVID drove adoption. MicroStrategy never would have bought any Bitcoin if it were not for COVID and the lockdowns.
Earlier in the week, the Bureau of Economic Analysis reported that the United States economy shrank at an annual rate of 1.6% in the first quarter of 2022. That was the first decline since the second quarter of 2020. The government also announced reduced spending on business inventories and residential investments compared to what had been expected. However, there was an uptick in consumer spending necessitated by the high prices of goods. Despite the macroeconomic woes and general market decline, MicroStrategy's Michael Saylor believes this is one of the best environments for Bitcoin to thrive. The American entrepreneur and investor believes the global economic decline can spur Bitcoin adoption as more people realize that fiat currencies are losing value fast. Rather than sit on a pile of cash that would have lost almost all of its value in a few years, more investors will look towards Bitcoin, the best performing asset of the decade and the only asset that has been completely uncensorable and unconfiscatable. Saylor gives examples of the Zimbabwean dollar, the Turkish lira, and the Japanese yen. When measured against the extremely disappointing performances of the first two fiat currencies, Bitcoin's performance, despite the recent crash, is certainly not as bad. All things considered, Michael Saylor believes the current economic crisis will drive up Bitcoin's adoption and, by extension, its price. We will now take you to Michael Saylor's interview. But before we do, please consider liking this video and subscribing to the channel for more videos like this. Also, ensure you drop your comments and observations in the comment section below. Enjoy the video.
When I think about the way that the price changes, I think there's the demand side and there's the supply side. So if I was building a model, it would be a multi-dimensional, multivariate, nonlinear dynamic model. It wouldn't be a single variable linear model. It wouldn't even be a single variable dynamic model. So I think it's indisputable that the halvings have an impact. That is, when you cut the block rewards in half every 4 years, that has a positive impact on the price because that cuts the supply that's being sold in the open market by the miners or the supply that's out there. So I think that's one element. But my model for the price of Bitcoin is it's a function of adoption and it's a function of technology utility and it's a function of inflation, all three of those. And then it's presumably a function of time, especially in the sense that over time, the supply hardens, right? And Bitcoin mining supply decreases because of the halvings. So all of those are important variables. When the technology improves, like when we're building Bitcoin into a Cash App, if you build if you build Bitcoin into Cash App and then you build Lightning into Cash App, and if I can send you $5 of Bitcoin for free in a split second, then the utility of Bitcoin is much higher. And as Lightning rolls out to all of these application protocols, you know, as companies like Kraken, when the exchanges build Lightning and when the wallets build Lightning and when there are other applications with Lightning, the utility leaps, the cost, the friction decreases. There'll be a day when billions of people will have the ability to receive and to send Bitcoin on their mobile phones instantly for free, no friction, easy. Yeah. So that makes a difference. But you know, that technology that drives adoption. Okay, so in a world where you have 100 million Bitcoin users using Bitcoin as their treasury asset, then you've got a certain demand. Now, if they decide they want to go all in and they want it to be 50 or 75 or 90% of their savings, adoption increases. When you go from 100 million to 500 million people using it, adoption increases. And adoption increases because of awareness. It's spreading over time. It increases because of crisis. For example, the Russian sanctions and the war in Ukraine, that drove adoption. Macroeconomic crisis. COVID drove adoption. MicroStrategy never would have bought any Bitcoin if it were not for COVID and the lockdowns. So lockdowns drive adoption, pandemic drives adoption, war drives adoption, inflation drives adoption. A lot of the early Bitcoiners, they bought Bitcoin because of the hyperinflation in Argentina. Now, so if you didn't live in Argentina, you didn't get struck by that, but all of those macroeconomic crises drive adoption, but technology, so there's good adoption. Technology is easy. Netflix is fun. I like watching it on my iPad. That's the good, easy, fun adoption. And then there's the painful adoption. Like in Zimbabwe, the currency's collapsed and they've announced they're going to dollarize. Yeah. Okay, so pain drives adoption, pleasure drives adoption.
Saylor also speaks further about things that drive Bitcoin's adoption, especially technology and economic crisis, such as the current global decline. He mentions the sad state of the Turkish lira, which has lost at least 61% of its value in less than a year. In 2017, the exchange rate was 1 Turkish lira to less than $4. Today, you would need 16.76 Turkish lira to get $1. In May alone, Turkey's inflation rose by a whopping 73.5% year-on-year, its highest in 23 years. There is little indication that things will not get even worse as the country still battles an excessive current account deficit, large amounts of private foreign currency-denominated debt, and very poor and impractical monetary policies from policymakers. This is not just happening in Turkey, but also in Venezuela, Zimbabwe, Nigeria, and many other economies worldwide. There is no doubt that investors in these countries will realize or are quickly getting to realize the importance of investing in an asset with Bitcoin's rare qualities. Let's get back to Michael Saylor's interview.
And then if we come back to the price issue, well, the price is measured in a frame of reference. So if you're measuring Bitcoin in pesos and the peso, loses, 99% of its value, the price in pesos is going through the roof. And the price in Zimbabwe dollars is going through the roof. And so as we print more dollars, and by the way, I'm looking at my my chart right now. I've got a 1-year chart of currencies, and against the dollar is strengthened against the Turkish lira 90% in 12 months. And you would go, okay, well, I knew that, but did you know it's strengthened against the Japanese yen 24%? And Japan is supposed to be a pretty stable company, but 24%. And it's strengthened against the pound 14%, and against the euro nearly 14%, and against the Australian dollar 9%. So what you have is all of the quasi strong currencies weakening against the dollar, some currencies collapsing against the dollar. And I got this other chart, which actually shows the change in asset prices against the dollar. And what you notice is that oil and wheat, right? The stuff you use to heat your home, move your car, and avoid starving to death. If you don't want to starve or freeze to death, those things are 35% more expensive, 40% more expensive in dollars. So if your food and energy are going up in dollars, and if dollars are getting more expensive in your local currencies, by the time you add that, you realize you've got serious, painful inflation. And that inflation, that drives adoption, that drives the price up. And of course, that creates the instigation. You could almost say the first order driver of price is inflation. If the currency gets cut in half, the price doubles in Bitcoin. The second order driver of price is adoption, because people get afraid of inflation, and so they start looking for a store of value. And the third order driver of price is technology, because once everybody gets excited about Bitcoin and gets excited about protecting themselves against inflation, the demand for mobile phone companies or for Google or Apple or Cash App or PayPal to build better technology into their applications leaps. And so I talk to a lot of companies, banks, fintech companies that are offering Bitcoin to their customers because there's demand for it. And the demand is created by macroeconomics. So I think that if you want to figure out what's the price doing, you say, well, every 4 years there's a halving. Every 4 years, a lot more people know what it is. And every 4 years, the technology gets better, the currencies get weaker, the need for adoption grows.
Supply, demand, adoption, technology utility, and time are some of the things that Michael Saylor believes drive Bitcoin adoption. He also states that the halvings and 4-year cycle play a role. Unlike price prediction models like Plan B's stock-to-flow model, Saylor says his preferred model would be multidimensional with multiple factors that are known to influence Bitcoin's price. It also appears that the MicroStrategy CEO still believes in the 4-year cycle over other new theories like lengthening cycles. The next halving will occur in May 2024. Though it is very unlikely, if the asset's price has not fully recovered from these lows by then, that could be the needed catalyst that would send us into another all-time high. What do you think about Michael Saylor's interview and his take on macroeconomic woes driving adoption? Please drop your comments and observations below, and don't forget to hit the like button. Thanks for watching our videos.